Welcome to The Deal. I'm Suzanne Stevens, reporting from The Deal's M&A Outlook 2009 conference. I'm here with Gary Parr, Deputy Chairman of Lazard. Gary, first of all, congratulations on Lazard being the largest securities firm regulated by the SEC.
Yeah,
you shared that bit of trivia up there.
Trivia.
Speaking of regulation, do you expect further regulation under a new administration? And if so, what areas might we see that regulation in?
Well, we expect a lot of change in the way regulation takes place for financial services. So a lot is consolidating into the Federal Reserve, for example. A lot of regulation is now going to be oriented towards looking at transparency, at risk management, at new capital levels. So all of that to be determined, and since we don't know who the appointees are yet for the new administration, it's hard to know exactly how they will approach this. But whomever is appointed, these themes, such as dealing with risk, dealing with transparency, are sure to be a part of new regulation.
Gary, you said on the panel that you felt we had passed an inflection point in this crisis. What was that inflection point, and when did we pass it?
Yeah, I guess I'll say it as I think we have passed the inflection point, or I hope we have. And that is the most intense period of the crisis. Came somewhere between, it sort of began as a Fannie Mae, Freddie Mac, and then Lehman Brothers, and then the follow-on AIG and such. But in that 5 or 6 week time frame, the level of intensity and the risk in the system was extraordinarily high. With now where we sit today, a lot of the large institutions with troubled asset portfolios are resolved, and the government has a lot of tools to work with. So we have solutions in place that ought to be able to remove the high level of uncertainty that we faced in that period of time.
Well, one of those tools is $700 billion bailout package. That's not enough. You said that, on the panel. What's your best guess on what might be enough? And is the government at this point looking at allocating that in a way you think will help rescue the system?
I think as to how, I think the government really did a very constructive shift from the announcement initially of buying assets to shifting to putting in equity into financial institutions. That has a lot more power in stabilizing companies and stabilizing the system. So that's been very effective. A guess is that they will continue to tilt that way in providing capital to the financial services sector, which the sector is short of capital. It needs that stability. As to what amount of money is needed, part of the answer is it could easily be $1 trillion. But there are an awful lot of ways to get the money or to come at it. It could be provided as equity, it can be provided as asset structures. In the AIG structure, where the Fed created 2 new vehicles, the capital is going to support asset pools. So in fact, it's somewhat like TARP. And what TARP was discussed, it's capital supporting assets rather than supporting a company directly.
The panel that you served on, Gary, was what will Wall Street look like in 2009? Let's look at 2009, but even beyond, once we get to a point where we really feel like we've come out of this crisis, what do you think our financial system might look like? How much more global might it be, for instance?
I think, I think that indeed the securities industry will be defined as some number, as I said, 4 to 8 major global financial services providers that have a full array of products. They're intermediaries providing capital and can do it on a global basis. Then we'll have a number of institutions still in the securities industry that specialize in a number of products or services, much like the old Wall Street, meaning low capital intensity, high service orientation. And then of course we'll still have a large retail financial services sector, and that is some number of institutions that purely stick to much as what the Wells Fargo model has been, and that is serving retail customers and delivering as many products as possible to those retail customers.
You mentioned we don't know who President-elect Obama's appointees to key positions are yet.
Right.
But what are your thoughts on how effective that administration would be, based on what we've heard Senator Obama talking about, in terms of what it might mean for deal making in the next couple of years?
I really don't know. It's too early to tell. So I can take a view as to what the economy, the consequences of the economy might be, what the environment we're in, how that will affect deal making. Which in financials a lot of it is consolidation via restructuring, and I'd expect that to continue under any administration because it's necessary. There are a lot of weak institutions that need to be consolidated into stronger institutions. that'll be a major theme for the next at least 12 months.
One of many.
Yes, exactly. So I think that's part of the environment, and I think the government will support that it's in the interest of the system to have that take place.
Gary Parr with Lazard, thanks for stopping by.
You're very welcome.